everything in the economy right now can't be doing what it's doing and still be fine. You can't print all this money. Real estate can't be like this. No inventory. Prices are up. Something has to crumble. Hey, welcome back, everyone, to another episode of Eat, Sleep, and Invest. I'm your host, Brian Driscoll, and I'm here with Paul Moore. What's going on, Paul?
Hey, not much. How you doing, Brian? It's great to be here.
Yeah, can't complain. I'm glad to have you. So, Paul, you have a background. I'll let you tell everyone mainly about your background, but you were in staffing, and now you do a lot in real estate and all kinds of stuff. So what exactly, give everyone how you got into this and what you're doing now.
Yeah, so we were in staffing in the 90s in Detroit, sold my company to a publicly traded firm, made a little bit of money, and I thought, I'm an investor now. This is going to be great. And I went out and started losing money because, Brian, I wasn't an investor. I was a speculator. I thought I was investing. And I learned many years later, after losing a lot of money, made some money too, that, investing is when your money, your principal is generally safe and you've got a chance to make a return. But speculating is when your principal is not at all safe and you've got a chance to make a return. And I didn't know the difference. I thought, I should have the same fun from investing that I did from being an entrepreneur. And I found out that I was terribly wrong. And so years later, I finally got into, I got a partner who really helped focus on this kind of stuff, like really get me on the right track. And so fast forward through 60 or 70 single family home flips, 30 or so waterfront lot flips, and finally got into commercial real estate 12 years ago. And now we have 6 different funds. Our new fund is a commercial real estate fund that invests in self-storage, mobile home parks, RV parks, etc. But that was a 25-year journey to get there.
Have you ever read the book Richest Man in Babylon?
Yeah, I have.
Okay, it just made me think of that right there because a lot of times they speculate and try to get unrealistic gains. It's like you try to do the fun stuff, and usually unrealistic gains don't return anything.
It's so true, isn't it?
Yeah, so tell everybody that doesn't know, what is a fund?
A fund, in my mind, would be, instead of just investing as an investor, when I invested in an individual property in North Dakota in 2010 and it didn't go well, I lost my money. But when I invested in a fund of self-storage, mobile home parks, etc., one of the properties lost money, but the other properties made money, and some made a whole lot of money. So it actually it was a diversification tool, and it allowed me to not. It's another way of investing rather than speculating. Sometimes, when you're rolling all the dice, doing double or nothing kind of a mindset on one property, if you lose it, you have nothing. But a fund hopefully buffers that.
That makes sense. So you're saying you're putting a whole bunch of properties together, and then multiple people are invested in it, hopefully to reduce, because some properties are going to lose money, you would think. But it kind of averages out the numbers for people.
Right. That's the goal.
That's cool. So now what are you guys doing? Like, you're in the RV space now, right? And self-storage?
Yeah. So our goal is to find the best operators we can and invest heavily with them. We're not the operators. And so we, for years, liked RV parks, but we couldn't find the right operator. We couldn't find a fantastic operator. We finally found one. And it was good timing because when COVID hit, and if we have time, I'll tell you more about what happened after COVID hit, but the RV park investment realm, the RV world in general, I should say, went through the roof. And so, we really enjoyed investing in RV parks, and I've got a special report I put together, and I can share some of that with you guys now if you want.
Nice. Do you camp at all?
Actually, I haven't camped in years, but I want to, and I definitely want to do an RV when I do. I just don't want to buy one.
Right. Yeah. Yeah. Me and my wife and my family got into camping probably the year before the pandemic. And then we saw, you're right, like campgrounds, they were sold out. You couldn't get into some of the places afterwards because everyone went out and bought a camper because you couldn't do anything.
Right. That's crazy. Do you know that there were 5 times, so 2019, probably the year you got into it, was the record year for camping. And then in 2020, the number of first-time campers went up 5-fold in
Really?
2020. And that was while people, part of the year people were locked in their house, but it still went up fivefold. Over 6 million new households tried camping in 2020. And what's crazy is that the RV camping world had already gone up 62% in a couple decades. Now, after COVID or in the middle of COVID, surveys show that there were 11 million RVs in the US, but 9 million more households wanted to buy an RV, and they said they would within 5 years. Well, that's crazy. I mean, there's not enough RVs being made to fulfill that demand. But the good news, Brian, is there is an Airbnb type sharing model for RVs, which means that somebody who doesn't own one can lease one for 3 days or 3 weeks, and they can even get it set up for them. So this is putting incredible pressure on RV parks. It's also, you've got an RV that's sitting idle for about 50 weeks a year. Now it's a rolling rental unit. It's being used maybe 3, 4, 5, 6 months a year. And so that means the same RV parks have to deal with that many more clients. And so it is very hard to get a spot at an RV park now.
You know what? That's a good point too, because you're right. You can rent an RV, just like the Airbnb model. And it's a lot of times, I have a camper. We have a pull behind camper though, right? And last year I only used it 4 times. It's just because you're busy. So we went a couple times, and it's great for the family. But for other people, they don't want to make the investment. Just go rent one. If you're only going to use it a couple times a year, rent somebody else's, and then you can get out there.
I know somebody that bought one about a year ago, and she put it on the rental market through Outdoorsy and RV Share. And in Colorado, she leased it for 6 months. And when I saw her last October at the Bigger Pockets conference, she said this $80,000 RV had netted her $40,000 in 6 months.
That's crazy.
Yeah.
Okay, so you're looking at RV parks. Are you looking, when you guys are you investing in obviously the weekend ones where people go rent for a day, 3 days, 5 days? And then are you also purchasing mobile home parks where they're stationary and people live? Or is it more just the ones that people come and go from?
Yeah, so there are 4 types of RV parks that we know of. And one is a travel RV park. It's just on the way somewhere, like by a road, So we call that an overnight park. Another one is, which is what you're referencing, I think, is an extended stay park where people build a deck. They might add a room on, they put a shed behind it, and they lease these spots for years or decades. And those are popular by lakes, especially in rural areas, or they can be actually workforce housing, which is the third type of RV parks. Some of the people at those long-term actually live there, but some, like workforce housing in North Dakota, when I was there, people leased or brought their own RV and they stayed in campgrounds there. The fourth type is a destination RV park. Now, there's 2 types of destination parks, Brian. One is near the destination, like Zion National Park, Grand Canyon, maybe going to a place they want to visit. The other type of destination park is a fully amenitized park that has, water parks, fishing and swimming lakes, face painting, hay rides, t-shirt painting, gem mining, a movie theater, arcades, all that type of stuff at the park. And so that's where we like to invest because it creates very high barriers to entry. It's very hard to compete with a park that, like one of the parks we invested in was a $3.5 million purchase, but it cost $18 million to build it out in total. And so, it's hard to compete with those kind of things. So that's what we like. We think all 4 types are great though.
Okay, yeah, we have one of those. Did you ever hear of Jellystone Park? I think they're national.
Yeah, Jellystone is one of the ones we're investing in.
Okay, yeah, they're nice. That's where we go. You're right. They have water parks. They have all kind of amenities. It's a lot more expensive to camp there, which camping's cheap anyways, but it's like double the price of a normal campground. But you're taking the kids there, and it's almost like a vacation place versus just going and sitting by the river.
You know what's crazy? We just experienced not only COVID, but a first in world history. I can confidently say that. Tell me if you agree. For the first time in world history, something like 30 or 40% of American workers can now work remotely, at least part-time. And so now, not only did that happen, but you've got people who are really taking stock of their lives, looking at the brevity of their life, looking at the importance of their family, and they're going, hey, let's get an RV or rent an RV and go, and I can go work. I can sit on the deck of this RV or out in front of the RV, and the kids can play putt-putt golf, 30 yards away and go swimming and fishing, and I can work and go have fun with them too. So it's a really amazing confluence of all these different factors lately. You know what I mean?
Yeah. And you know what? I saw one of those. I think it was in some of the stuff you sent over. That it was a big camper, and in the back, it looked like it was one of the ones, like a tote camper that they had maybe for the stick a quad in the back, but they took it out and put the desk in there. So it was like a workspace. My wife actually wanted to do that back during COVID. She's like, why don't we just get a camper and go across the country? I'm like, well, I got to work. And she's like, well, let's set it up and get a desk. I never did it, but yeah, I see a lot of people doing that.
That's my friend Chad. He's the CEO of a company, and he outfitted his camper with 2 drop-down desks. They come down on like cables, and he works there, and then he puts them back up to the ceiling, and he pulls all his dirt bikes in and goes to the next destination. That's
cool. Yeah, and you're right. In today's world too, half the people are working remote, and you're right. You don't have to go to the office anymore. A lot of people don't have to, so you're not tied down anymore. Versus back in the day, you would be tied down. It's like I can only go 3 days because I have to come back to the office on Monday.
Right. That's exactly right.
Now, what do you see too so you're investing in the big campgrounds. What do you see, and I don't know if you know this, on the smaller ones for like normal investors that just want to buy single stuff? Like, what are the pros and cons you see on that?
So to buy a single park?
Yeah, just like I know some guys, they just buy a park and then try to manage it.
So the big destination parks are a massive pain in the butt. I mean, you need a company that knows how to do the staffing, hiring, management, OSHA, all that stuff. It's a huge deal. A friend of mine wanted to buy a park, and he was able to do that here at Smith Mountain Lake in Virginia. And this park is the type that's the extended stay park. So people have decks and, all that. They stay for years. Get this. They have to commit for the next year by October 1st of the previous year. And then they have to pay in full for the whole next year by March or April. So he's collecting up front. He doesn't seem to have any eviction problems. He doesn't seem to have that many problems at all. And I don't think that it takes a very big staff. One of the cool things about mobile home parks and RV parks, if done right, there's not a lot of capital expense and maintenance for a lot of these because you're mainly leasing dirt and infrastructure, right?
Yeah, I guess you're right. Yeah, people are paying to park, and you just have to have the utilities there.
Yeah, it's pretty cool, and that's how we like to do mobile home parks as well.
I saw when you sent your stuff over. Let's talk about. You went from, I have a note here, 1.5 million in the bank, 2.5 million in debt, and then you got debt free. How'd you do that?
Well, it's even crazier, the timing of this. So I sold my company, and we donated some money here and there, and we ended up with about $1.5 million in the bank in 1997. Exactly 10 years to the month later, in the fall of 2007, we had $2.5 million in debt. And we had a whole bunch of properties we were in the middle of, buying to flip. And then, of course, the market came to grinding to almost a halt, not quite. And we didn't have any idea that we were going into the worst recession since the Great Depression. We thought things were bad, but we were hoping the worst was over. Well, the worst was just beginning. So I have a hero. One of my many heroes is a guy named George Mueller. Now, George Mueller lived throughout the 1800s. This is a picture of George for those who can see. One of the few people from the 1800s you'll ever see that's smiling. I mean, it's crazy, but he was actually a really happy guy. Well, he had all these crazy views about like raising money. Like he would never put a word out. He would only pray and ask God to give him money. And he actually took care of 10,000 orphans over the course of his lifetime, and he never asked for a penny. Well, he had all these views on debt and finances and all these things. And like he, of course, you can imagine he never believed in having a penny of debt. Well, I was already in trouble if I wanted to follow George. But I thought, well, if George found himself $2.5 million in debt, what would he do? And I thought he would do something really crazy, like give his way out of debt. And so I picked some charities I really liked, and I started January 1st, 2008, not knowing we were going down this horrible hole. I thought, well, I'm going to either give until I'm bankrupt or until something good happens. Well, 4 weeks later, I met a guy who gave me an idea to sell off the vast majority of my waterfront properties that I had all this debt on. And this idea sparked a whole kind of a new business model. And it took a lot of work. I had a lot of calls to attorneys and surveyors and bankers, and I had to find buyers. We sold 3 very expensive waterfront lots from the very worst weeks of the great financial crisis in September and October of 2008. And we were completely debt-free in 13 months.
It's crazy, especially then, too, because I was there, too. Some of the people listening are probably too young for that, but that was a scary time.
Yeah, it was a scary time. And but I really believe I can get through anything now. We'll see.
What was the business you sold?
The company I sold in 97 was a PEO, a professional employer organization that did staffing.
Okay. That's a tough racket.
Yeah.
Yeah, that's cool. Now you follow Warren Buffett too, right?
Yeah, I do. I really follow Warren. I'm actually writing a book called Warren Buffett's Rules for Real Estate Investors.
I mean, you're a Bigger Pockets publisher, aren't you?
Yeah, I published a book called Storing Up Profits, Capitalize on America's Obsession with Stuff by Investing in Self-Storage. And that was a Bigger Pockets book.
That's cool. How'd you get hooked up with Bigger Pockets?
You know, I just had a friend, Dave Van Horn, who some people know from PPR Notes there in Philadelphia. And he and Michael Blanc, B-L-A-N-K, an apartment investor, they both introduced me to the editorial person at Bigger Pockets, and I was up and running.
That's cool. Yeah, writing a book. So you're writing one about Warren Buffett's principles, right? Is that what you said?
Yeah, basically what we're doing is we're taking Warren Buffett's principles for owning companies and stocks, and we're translating that to, well, what if he was a real estate investor? How would he think about investing? And so we've got lots of principles. One of the most recent relevant ones, this is a slight paraphrase on what he said, but he said, sure, the rising tide lifts all boats, but someday the tide will go out and then we'll see who's skinny dipping. And that's what we've been warning since 2017 in a lot of blogs in Bigger Pockets and elsewhere. We've been warning people, hey, I wrote a book on multifamily. You might not want to invest in multifamily right now. It's really, really a dangerous time. That rising tide is going to that tide's going to go out someday. Well, it went out in the last year. And tons of people are in trouble right now, especially people who invested in multifamily. Not all of them, but some of them.
You think we still have a lot coming?
Yeah, I do. I can't prove it. Brian, how does this work? So somebody's got this is a real true story from a friend of mine. He's got a large apartment complex. He had floating rate debt at about 3%. Okay, now that floating rate debt, those debt service payments, the interest payments have gone up from 3% to, let's say, 6 point something, let's say 6.5. His interest or debt service payments, more accurately, have doubled. Worse than that, well, in addition to that, the rents haven't gone up. In addition to that, his cost of operations have gone up. But worse than all that, his banker said, hey, you've got $1,000 a month interest rate cap reserve, because his reserve, he's got an interest rate cap that caps him from going up too high. Well, that's going to expire someday. When that expires, he's going to have to buy a new cap for millions of dollars. Well, his banker's making him reserve. He was spending $1,000 a month for this interest rate cap reserve. Now they've upped it to $89,000 a month.
Whoa.
And that's happening all over America right now, Brian. I mean, people aren't talking about, but that's devastating.
So is that pretty much like term life insurance? Once your term expires, you can keep it for $5,000 a month when you're only paying 100. Like they say, you can still keep it, but the price is just astronomical. You can't afford to hold it there.
I didn't think of that, but that's a good analogy.
Yeah. Okay. So, boy, that sucks.
Yeah.
So then, yeah, even I'm looking here too, because most people will take on loans, like commercial loans, 5 year. Sometimes some of the commercial loans will lock for 5 years. So in your situation, still, like you figure, even the people that have the 3% interest now, they might still have it for 2 years because these are all going to be resetting over the next 5 years.
Yeah,
and the people that aren't buying, a lot of people over leverage. So that, like, some people won't hurt because they have a lot of cash flow and they can absorb it. But the people that are over leveraged are going to have a problem with that extra interest if you don't have much cash flow anyways.
Right. That's exactly right.
Yeah. Warren Buffett, he said, what? Be fearful when people are, well, you know the saying. What was it? Be fearful when people are...
Yeah, be fearful when others are greedy and be greedy when others are fearful. And what he means by greedy is, most people probably know this, but that means the time to buy is when there's blood running in the streets. And that's about what we're getting to within the next year, I think.
That's what I'm thinking. I don't know if it would be a year. I know it has to come. Like, you can't have perfect, like, everything in the economy right now can't be doing what it's doing and still be fine. You can't print all this money. Real estate can't be like this. No inventory. Prices are up. Something has to crumble.
Right. It's absolutely true.
Yeah. And I guess that's the time you want to be liquid and flush with cash.
Right. Here's something interesting. Warren Buffett and Charlie Munger say they've never had a conversation in all these 50 years or whatever together. They've never once talked about buying or selling an asset based on the current economy. They said it's not even an issue. They don't care what the current economy is doing. They're looking for businesses that have a durable product, a great management team, that are significantly underpriced with a margin of safety. They don't care what the economy's doing. Now, they do buy more when the economy's bad because there's people who are forced sellers or who panic sell,
Yeah, they're looking for cigar butts, right?
They used to be doing cigar butts. Yeah, that's right, for about years and years. And Charlie Munger talked Warren Buffett out of that in the mid-'70s. And their purchase of See's Candy, and then next the Buffalo Evening News, and then Geico. Those three purchases got them out of the cigar butt mindset.
And that does make sense too, because a lot of people are thinking now, like, okay, the market just turned around, we got to buy. And you're right, you got to think, okay, 3 years ahead, 4 years ahead, what do we? And no one can predict, but you can kind of look at data and things and maybe guess, and hopefully you're right, and purchase based on that versus today.
Yeah, it's true.
Yeah, or sell. I mean, a lot of people, I've been hearing this last year, liquidating. They're liquidating because they think there's a crash, and then they want to, whenever that crash comes, have a lot of liquid cash to be able to deploy it.
Right. Yeah, it's true. It's a good time to be liquid. I think the next year or two, there's going to be a lot of deals.
It's fun times, right?
Yeah.
Yeah, cool. Hey, when do you think you're going to have your book done?
It's been 80% done for a couple years. I just need to spend about a week really focusing on getting all the chapters organized, getting an introduction, an ending. I've already got a publisher waiting for it, but I just haven't had the time to finish it.
Yeah, I hear you. Let us know when you do. We can plug it out for you.
Thanks.
So, hey, Paul, if anyone wants to get a hold of you, find out about any of the funds, you said you had a... what'd you call the RV worksheet thing you have?
Oh, yeah. We've got an RV park special report. We have one on mobile home park investing, another one on self-storage investing. This is for accredited investors only, but you can get the report if you're accredited or not. And you can go there to my website, wellingscapital.com. That's WELLINGS, wellingscapital.com/resources. And you can get access to all that stuff for free.
That's cool. What's all in the report? I was looking through it. It had a lot of data in there. Why don't you tell everybody a little bit about what's in there?
Yeah, basically we've got the history of RV park investing, why it took a huge turn upward during COVID, why it got even more powerful when you add the RV sharing model, the 4 different types of RV parks. We've got information on the detailed information about destination parks, since that's what we know the most about, how all the value adds. I mean, who would have ever heard of Wibbits? I'd never heard of Wibbits, but when I went to an RV park, I didn't actually camp. I stayed in their cabin with my wife because she's not a camper type. But we learned about Wibbits. Wibbits are a floating obstacle course on the lake, and it's about $200,000 or $300,000 add-on. But the destination park charges something like $17 an hour for kids to play on this floating obstacle course, and they can make up to $1,000. The park can per hour, $1,000 per hour in the season from these Wibbits. So there's value adds like that, renting golf carts, all kinds of fun value adds that can be added to make a profitable RV park. I've often thought, wouldn't it be great to have an RV park? It'd be a passive investment. Well, I don't think that anything, I think there's very few passive investments. I mean, if you're the owner or operator, and I don't think this is one of them.
Yeah, that's what I was always thinking too. Because like I said, we got into camping. I'm like, boy, maybe I should just buy one of these. And I'm like, then I started thinking about it. And yeah, you have to staff, and then you figure some of the employees, then you have to deal with employees not showing up.
Yeah.
Things like it's a full business you have to run there. It's not just buying a property and renting it out. You got to manage it.
Right.
Hey, everyone, go check out Paul's download though, because it's not a chintzy little one pager. I was looking through, it's 30, 40 pages, but it has a lot of data, especially if you like reading data, things like that. Pretty informative. So, hey, Paul, what's your favorite book?
My favorite book is The One Thing by Gary Keller and Jay Papasan. And like I said, I think I mentioned earlier, I was a shiny object chaser and a speculator. And this book helped me focus and realize that what was fun and exciting was not chasing all these various things at once, but doing one thing repetitively and getting a great outcome and creating great wealth for other people too.
Yeah, and you know what? Before we go, let's talk about that for a minute, because I see that a lot, especially with people that are new, but even people that are seasoned in business. It's really hard because you have all these different opportunities popping up.
Yeah.
What tips do you have there to stay focused on, and how do you choose what to focus on?
We had a podcast for years called How to Lose Money, and we interviewed 238 successful real estate or other entrepreneurs, investors, managers. And we found out one of the main problems was chasing shiny objects. But ironically, Brian, we did some takeaway lessons toward the end of the show after 4 years. One of the lessons we learned was, if you realize you're on the wrong path, cut your losses and stop early on. Don't keep going. Quit early. But another one of the lessons we learned was always persevere. Never quit. Keep going. You're only 4 inches away from the gold, that old story of the gold miner. And so we're like, these are totally opposite. How do you know when to quit and when to keep going? And you just got to figure out. That's where wisdom comes in. A lot of that comes with age and good counsel. But knowing if you're on the right path or on a side bad path. And so figuring that out, like when we were doing multifamily in North Dakota, we were on a great path. It was profitable. It was working. The side path was when we decided, hey, everybody here needs internet. We're going to do a wireless internet company. That was a bad path. We invested almost $400,000 and a lot of years into that, and it never turned a profit. That we should have cut off within 3 months. And when we realized it wasn't working as well as we thought it would. And I wish I would have had the wisdom to do that.
Yeah, that's a tough thing to tell. You're right, because it's like everything I do, it's always, hey, I'm not going to quit. I'm not going to quit. You keep pushing. But yeah, you have to know, how do you know when you're on the wrong path and to quit it? You got to, what pops up? Or is it how do you know? Because it's you're failing either way. You got to decide, am I failing because I'm moving forward to it? Or am I failing because I'm just chasing something that's just like a dream?
I just don't have an answer for that. And I was trying to come up with that answer. We were thinking about writing a book called How to Lose Money. And we couldn't really we just couldn't quantify that. We just think it's wisdom, gut feel, getting good counsel from older people, or if you are old like me, knowing the difference, and just trying to be, super I don't have a definite answer, one size fits all, Brian. I wish I did.
Yeah. You're right, though, getting who you surround yourself with, though, because you're right. If you surround yourself with successful people, it'll kind of wear off on you, and then they can tell you from their experience, they're like, you know what, we tried something like that before and it didn't work. So, and give you advice on that stuff. So that's a good answer. Yeah, cool, Paul. Hey, well, thanks for coming on. We appreciate you.
Brian, it was great to be here. A real honor. Hope to see you again.
Hey, thanks. And give everybody the website where they can get that download one last time.
Yeah, it's wellingscapital.com/resources.
All right. And everyone listening, if you guys need leads for motivated sellers, remember, go to motivatedleads.com. We do a paper lead service. We'll sell you leads on an a la carte basis, no monthly fees. Hey, thanks, Paul. Thanks for coming. We appreciate you.